We spoke about banks. Let's hear out the Bank of India management.
Rajneesh sir, the first question is what led to the strong growth in the operational numbers in this quarter?
Yeah, thank you so much for having me here in NDTV Profit, and a very happy new year to all the viewers and your team. So very good numbers we have shown, particularly on the top line and bottom line. So on the top line, if I tell that our global business has grown by around 12%, global deposits have grown by more than 11% on a YOY basis, and our global advances have grown by more than 13% on a YOY basis. Domestic advances have grown by more than 15%, and our RAM advances have grown by nearly more than 20% on a YOY basis. As far as the operating part is concerned, our operating profit has also improved, and our net profit has also increased by more than 7%. And as far as the NIM is concerned, our NIM has also improved from 2.41, global NIM at 2.41, which was in the last quarter, to 2.57 in this quarter. So overall, there has been improvement in both in the top line and the bottom line, and also in the asset quality parameters. If you see our gross NPA numbers, we have now come down to a number of 2.26 on the gross NPA percentage side, with a reduction of nearly 143 basis point on a YOY basis. And our net NPA numbers have now gone down and come down to 0.60%.
Right. Rajneesh, giving much more, details into the NIMS portion, there was an improvement sequentially. But what's the guidance looking like for NIMS? The entire industry is still waiting for that NIMS to bottom out the pressure. But definitely Bank of India is doing something well, especially the NIMS going up. So this trajectory will continue in the fourth quarter. What's your guidance for that?
Yeah, just to tell you a heads up on the numbers and NIM. So our global NIM, which the global NIM, as I said, which was 2.41, we have improved it to the 2.57 number. The backdrop of that is that our yield on advances, which was 7.81 in September, we have protected the yield on advances at 7.81 in December quarter also. However, we have improved our cost of deposits in the sense that we have reduced the cost of deposits, and it is now at 4.71%. And the gap between the cost of deposits and yield on advances is 3.04%, and it has improved by nearly 8 basis points over the last quarter. This has helped us improve the NIM from 2.41 to 2.57%. As regarding the guidance is concerned, you are aware that the last repo cut had happened on 5th of December, and the impact of that repo cut was only 20 odd days in the Q3 quarter, but the full impact of that would be happening in this quarter. So definitely, there will be some pressure on the NIM in this quarter because of the full quarter. But we are trying to improve our portfolio as far as the deposit is concerned. We are trying to raise more CASA and more retail term deposits, and trying to bring down the cost of deposits so that we are able to protect the NIM as far as possible.
And Rajneesh, the margins front, that's expected to improve further. That's what the broking community is, factoring in, especially regarding the repricing of deposits, which would happen in the fourth quarter of FY26. What's your view on that?
Yes, definitely there will be repricing of deposit happening in the fourth quarter and the Q1 of the FY27, and that will help in improving the margins. We feel that the margins have bottomed out, and from the Q4 quarter onwards, the upward trajectory on the margin should start, subject to the thing that there is no further repo rate cut.
And Rajneesh, the slippage cost, that has actually slightly went up on a marginal basis. Your view on the slippages cost for Q4?
So slippage cost, if you see, our slippage ratio is at 0.34%, 0.19% in fact, and it has gone up by 2 basis points over the previous quarter. There has been a marginal increase in the fresh slippages. However, we feel that we will be able to contain our fresh slippages, and the slippage ratio for this quarter in Q4 quarter should be at around the same level as the Q3 quarter.
Right. And Rajneesh, the last question is, in the con call itself, you had mentioned that there might be a challenge to maintain the CASA ratio in the coming quarters. What's your view on that? Can you just give us more light onto this?
So CASA is a challenge for the entire banking system today, both on the saving account and the current account. And there is a structural shift in the way deposits are happening in the banking system. So most of the depositors, both in the saving account and current account, they are not keeping much of a balance. And a lot of investments in flowing is into the equity market, mutual funds, pension funds, and also insurance and other kind of assets like gold and real estate. So there has been a structural shift as far as the deposits are concerned. So with the kind of credit growth that the system is seeing, and we are also growing our, as I said, our domestic advances by around 15%, and the robust credit growth and the pipeline that we have of around 80,000 crores in the credit, we feel that definitely we will be raising deposits. If the CASA does not grow, we will be raising retail term deposits and bulk deposits. Retail deposits, just to give you a sense, we have grown by 14% on a YOY basis in this quarter, in the December quarter. And to keep up and to catch up with the credit growth, definitely deposit will have to be raised. And this is the sense I have, that this will impact the percentage of CASA to the overall deposit. And we feel that it will be under pressure.